Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for April 25th, 2018. So yesterday, folks, I mentioned in the morning note and the morning video how important it was for the market to hold the 50-day moving average, to get back above it, to reclaim it and hold that 50-day moving average. Or I suggested it would open the door for the bears. And that certainly played out. Unfortunately, that played out. We missed a great opportunity to recover here in the market. And by the way, if you have not ever read the morning note, please make sure in the description below you can have access. There's a link to the morning note on every video. So here we have now a confirmed failure of the 50-day moving average. Again, a failure of the downtrend and a pretty ugly situation to boot. This morning we're looking at futures actually pushing us lower still. We're getting a little bit of a bullish bounce here as the morning goes on some of the earnings reports. But the sentiment for the market seems to be well, just pretty darn ugly. We're looking at just some ugly moves. Now, what really triggered this, according to reports, is that during the Caterpillar report yesterday, they mentioned that they saw the first quarter of this year as kind of the high water mark, the point at which from there it's going to be a downhill slide for them, and that just seemed to trigger a widespread sell-off. And it seemed to affect most sectors of the market. So there was really no place to hide. And if you remember yesterday, I mentioned how important it was that we were going to have to stay focused on price action and remain flexible. If we take a look at the Dow chart on just a 15-minute time frame, you can see where that trouble really started to come into play. Right here. Here is our morning pop. We started to pull back. We consolidated for a little bit. There was a little bit of a decision point, and then bang, we went from there. And that just really translated across the majority of the market. Pretty ugly day for most, and nasty whipsaw that nobody likes to see ever. So what does this mean now? Well, it means here in the diamonds and the SPY, as you can see, we've failed the 50-day moving average. We've failed this trend. The Qs, the ugliest of the bunch, my goodness, the Qs got thumped on hard yesterday. We have really confirmed lower highs in the market. And if you take a look here on the Qs now, we even have the dreaded head and shoulders top pattern showing up here. So what do we do now? Well, I think when you look at this, this certainly would suggest that a retest, at a minimum, a retest of these April lows here is certainly possible. And any lower high in a market, if we look at just your basic lower high in a trend, points to the possibility of more market lows. So keep that in mind. This may not be done for a while. Unfortunately, we missed that opportunity to recover that 50-day moving average. Now, that doesn't mean that that's a sure thing, and I'm certainly not saying it's a done deal that we're going to break for new lows. There's a lot of earnings reports, and those earnings reports certainly have the potential of reversing the market again, that possibly the selling got carried away yesterday and we reverse back up. But even if that situation does occur, if we get a nice bullish move back, please keep in mind we have got a lot of work to do to get back above that resistance point. We have really failed through a significant level of support, and that is in 3 of the 4 major indexes. Now, IWM held up pretty well. We did test the 50-day moving average and bounced off of that, but so far IWM remains the strongest of the four major indexes, and the only one that seems to have some hope of maybe holding on here. So we'll have to watch this closely. Now, as the morning has been moving along, we've been down as much as 120 points in the futures, and at this very second, as I'm recording this, we're actually ticking into positive territory on the Dow futures. So we're flipping back and forth here, even in the pre-market. Keep in mind that whipsaws, intraday whipsaws, are very possible when a market gets emotional like this. So keep that in mind. We have to stay very focused to price action and set aside our bias and remain flexible to move with the direction of the market. Try not to fight a market like this, because often you will lose in a situation when you fight or attempt to fight the market. Let's take a quick look at the VIX. The VIX is also a bit of a concern. We ended up solidly holding this price support and testing right here the downtrend of the fear index. So a move down today could easily shoot us up above this downtrend line, and that would be a real concern, I think, for us in the market. We could really look for a sharp selling wave to trigger if that does occur. So stay focused to that price action and be willing to be flexible. No matter whether or not they report good earnings. Caterpillar reported good earnings, and actually extremely good earnings, and look what happened to them. There's a lot of charts looking like that right now, so be very careful. This is, if you take a look at the candle moves throughout that chart, you're going to have a hard time finding one that's that dramatic. That means something has shifted, that sentiment has changed suddenly, and we're going to have some repercussions of that. I call it a shock wave. It's a shock wave, and there's likely to be further tremors. And keep in mind that sometimes the tremors can be as big as the initial shock wave. So kind of keep that in mind as you're trading. Plan your risk carefully and plan accordingly. Let's take a look at T21. 22, and please understand, guys, I am not suggesting that we are just going to fall through the floor here and just keep falling. I don't know what's going to happen. All I'm doing is trying to read the charts, and the charts are showing us that we have definitely confirmed that lower high, and if we are going to follow along the normal course of a lower high trend, then we should seek at a minimum a retest of the lows and a possibility of a lower low. So all I'm trying to do is I don't want to sound bearish, because I'm really not that bearish. I just have to follow what the chart is telling me, and the chart is telling me we could have trouble yet to come. T21.22 didn't move a lot. We started up yesterday. Everything was looking good, but it didn't move a lot to the downside. So, we have room here to go either direction. We're not oversold yet. We're certainly not overbought. So we're kind of in that mid-range where anything is possible. And that's really going to, determine, things are going to be determined, I guess, by how the way the market responds to these earnings reports. So with that, folks, we've got a challenge on our hands. If you are a new swing trader, if you are new to the markets, be really careful here. Don't fight a market like this. There could be a lot of back and forth and a lot of intraday whipping going on when we start getting emotional like this. So be really careful. Plan your risk carefully as you go forward. On the economic calendar day, we have a light day on the economic calendar with really only one report that could potentially move the market, and that's the EIA Petroleum status report. Now, last report on this had a kind of surprise decline in supplies, and that helped bolster oil prices. Now, oil has also been strong just because of the conflict, the potential conflict in the Syria, Middle East area that could restrict oil supplies. But if this were to continue to show declines, that would certainly help the market in keeping at least that oil sector up. If the oil sector were to participate in this sell-off right now, that could certainly create some issues for the overall market and make it difficult for the market to rally up out of here. So keep that in mind. On the earnings calendar, just a huge wave of earnings, about 245 companies reporting today. We have nearly 400 reporting on Thursday and about 100 on Friday. So keep in mind, there's a lot of data yet to come out, and the market can definitely react in a lot of different ways. So be prepared. We've got a bumpy ride probably ahead of us here for the next several days, maybe even a little bit longer. Be careful. Plan your risk carefully, all right? And just protect your capital. Folks, if this is the first time you've seen this information, please do me a favor. Click on that subscribe button on Facebook, on YouTube. And on Facebook, click that follow me button. I do post the videos over there on Facebook. Click those subscribe buttons, those thumbs up buttons. I really do appreciate that. Drop a comment, and always feel free to share this information with any friends and family that you might think could benefit from this information. Everyone, I want to wish you all a fantastic day. I want to wish you great profits. Take care, protect yourself, and we will talk to you all very soon, bright and early Thursday morning. Have a great day, everyone.